You think life insurance is just for when you die? Wrong. The wealthy don't just protect their families with it, they build empires. While you're chasing stocks and crypto, billionaires are quietly pouring millions into life insurance. Why? Because it's guaranteed, tax-advantaged, and almost invisible to the IRS. In this video, I'll show you how life insurance is more than a safety net. It's a powerful, low-risk wealth strategy. And trust me, by the end, you'll never look at life insurance the same way again. The truth is, life insurance got a bad rap. Most people think it's just a policy that pays when you die. But the rich figured something out long ago. They use life insurance as a financial foundation. Why? Because permanent policies like whole life or indexed universal life, also called IUL, accumulate cash value. That means your money grows tax-free and you can borrow against it anytime, like a private bank. Walt Disney used his life insurance to fund Disneyland. Ray Kroc used it to launch McDonald's. The Rockefellers passed down generational wealth through strategic life insurance trusts. Meanwhile, average people ignore it and miss out on a hidden wealth tool. Here's where it gets real. When you invest in a properly structured life insurance policy, like whole life or IUL, a portion of your premium goes into a cash value account. That account earns interest, often guaranteed, sometimes tied to the market with no downside risk. Over time, this cash value grows predictably and tax-deferred. Now here's the kicker. You can borrow from your cash value tax-free, using your policy as collateral. You're not withdrawing money, you're taking a loan from the insurance company while your investment keeps growing. This is how the rich create their own private banks. They fund their policies heavily, let them grow, and then borrow against them to buy real estate, businesses, or even pay taxes. And guess what? If they pass away, the death benefit pays off any loan and still leaves a lump sum to heirs, tax-free. Let's compare. Traditional investing in stocks, crypto, or mutual funds might give higher returns, but they come with risk, volatility, and taxes. With life insurance, you're playing the long game. Returns may be lower, think 4 to 6% annually, but they're guaranteed, tax-advantaged, and non-correlated to the stock market. And during a recession or bear market, life insurance stays strong. The market crashes, but your cash value doesn't. Imagine this. You're 55, planning for retirement. The market tanks again. 401ks get wiped out. But your cash value in life insurance keeps growing, untouched. Even better, there are no age restrictions or penalties for accessing your cash. No waiting until 59 and a half like a retirement account. And when you pass, your heirs don't pay a dime in taxes. It's safe, strategic, and powerful. Exactly why the 1% love it. Let me tell you about a man named Ben. At 35, he started a whole life policy, paying $500 a month. By age 55, he had over $150,000 in cash value and a $500,000 death benefit. When his daughter needed college tuition, he borrowed $30,000 from his policy. No loan apps, no interest payments to a bank. He paid it back on his terms. At retirement, he used the cash value for income, tax-free withdrawals, while leaving a solid death benefit behind for his family. Now compare that to his friend Dave, who put all his money in a 401k, only to see it crash in 2008 and again in 2020. Dave had to delay retirement, pay taxes on withdrawals, and had no death benefit. Then there's business moguls. Walt Disney funded Disneyland this way. The banks said no. His policy said yes. And guess who else? J.C. Penney, Doris Christopher from Pampered Chef, and even Joe Biden reportedly held permanent life insurance to protect wealth. Here's the part you came for. The top 7 reasons why life insurance is a brilliant investment, especially in today's economy. Your cash value grows without being taxed annually, unlike stocks or savings accounts. You can actually borrow against your policy without triggering capital gains or income tax, which is honestly a huge advantage. No matter what happens, your family gets a guaranteed payout, and often it's income tax-free. In many states, life insurance is protected from creditors, lawsuits, or even bankruptcy, which can give you some real peace of mind. Your money isn't tied to the stock market. When markets crash, your policy doesn't. Access your cash when you need it. No penalties, no bank approvals. Set up trusts to pass on money tax-free, avoid probate, and create multi-generational wealth. No other single financial tool gives you this much flexibility, protection, and peace of mind, all in one plan. So, which policy is best for investing? Here are the top 3 to consider if you want growth plus protection. Guaranteed growth, fixed premiums, and a strong death benefit. It's perfect for conservative investors. So, indexed universal life, or IUL, grows with the market, like, the S&P 500 and stuff like that. There's zero downside risk here, which is honestly a big deal. Payments are flexible, so you can kinda adjust as needed. It's really best for folks who want some upside potential, but don't want to worry about losing money if the market drops. Now, Variable Universal Life, or VUL, is a bit different. It's got higher risk, but also a higher potential return. You actually get to invest in funds, like mutual funds or ETFs. This one's definitely ideal for hands-on investors who want to be more involved. The best policy really depends on your goals, whether that's stability, growth, tax savings, or even legacy building. But not all life insurance is created equal, and honestly, not every agent will structure it in your best interest. Here's what to watch for: overpriced premiums, high commission products, underfunded policies, and No cash value buildup. So ask questions. Make sure your policy is overfunded, meaning you pay more into it early to grow cash value fast. Work with an agent who actually knows infinite banking or LERP strategies, not someone just trying to sell a death benefit. Here's the truth. Life insurance gets more expensive the longer you wait. The best time to plant a tree was 20 years ago. The second best time is today. The younger and healthier you are, the more you can fund your policy for growth instead of just coverage. Start now, and by the time you hit retirement, you've built your own private tax-free bank. No Wall Street volatility, no complicated retirement rules. Just predictable, stable, long-term wealth. So, don't just buy life insurance. Invest in it. Let it work for you, protect your family, and build wealth silently while others chase risky trends. Life insurance isn't just about dying. It's about living well, retiring smart, and leaving a legacy. Now that you know the truth, what will you do with it? Smash that like button, subscribe for more smart wealth strategies, and tell us in the comments, would you invest in life insurance now?